There's a paradox unfolding quietly in global finance. The United States once used gold to build its empire. Now that same metal could be the weapon that brings the dollar's dominance to an end. It all began in 22, when Washington and the European Union froze over 300 billion USD of Russia's foreign reserves with a single sanction order. According to the IMF, that was nearly 60% of Moscow's total reserves. The first time since World War II that a major power had used its own currency as a political weapon. That decision shocked the world. If the assets of a nuclear superpower could be seized overnight, who would be safe next? From the Middle East to Asia, nations started to question the neutrality of the dollar. According to Bloomberg Economics, within just 2 years, the share of the US dollar in global reserves fell from 71% in 1999 to 58% by the end of 2024, its lowest level in more than 25 years. Meanwhile, data from the World Gold Council showed central banks buying a record 137 tons of gold in 2024, 5 times the annual average of the previous decade. Gold, long dismissed as an outdated relic, was quietly returning to the center of power, and among all nations, only one saw the moment as an opportunity: China. While others were reacting defensively, Beijing moved strategically. According to the U.S. Treasury, China's holdings of U.S. Treasury bonds have plunged from 1.83 trillion USD in 2013 to just around 700 billion USD in 2025, the lowest in 14 years. The money didn't disappear, it was converted into gold, the one asset the United States can neither print nor freeze. As of mid-2025, China officially holds 2,298 tons of gold, according to the World Gold Council, the highest level in its modern history. Analysts at Bloomberg Metals Outlook estimate that the true figure could exceed 4,000 tons, since Beijing often discloses only part of its reserves to avoid roiling the markets. When America prints money to rescue its economy, China buys gold to rescue its power. When Washington expands sanctions, Beijing expands its vaults. And as confidence in the dollar fades, China is quietly constructing a 21st century gold standard, a system where value is backed not by promises, but by the one material every civilization has trusted for millennia. According to Reuters, 95% of the world's central banks now plan to increase their gold reserves within the next 12 months, the highest level since 1967. This is no coincidence. It's a chain reaction. When one superpower buys gold, others follow. China understands a timeless truth. You don't need to fire a bullet to topple an empire. You only need to make its currency lose credibility. And that's why gold is back, as the opening move in a silent financial war, one that began not with bombs, but with bars of metal quietly stacked inside Beijing's vaults. While most nations reacted defensively to the weaponization of the US dollar, China responded like a chess master who had already studied the entire board. Beijing understood that every empire in history began to crumble the moment the world lost faith in its currency. And to prepare for that moment, China started rebuilding its reserves from the ground up. The first move was simple but decisive: dump US treasuries. According to data from the U.S. Treasury Department, China's holdings of American government debt have fallen from $1.3 trillion in 2013 to just around $700 billion in 2025, a drop of nearly 50% in a decade. Every dollar pulled out of Washington's debt market didn't disappear. It was quietly converted into gold, oil, and tangible assets. According to the World Gold Council, China purchased 225 tons of gold in just the first half of 2025, nearly 30% of all global central bank buying. Its officially reported reserves now stand at 2,298 tons, but analysts at Bloomberg Metals Outlook believe the real number could exceed 4,000 tons if one includes the metal held by state funds like SAFE and the China Investment Corporation. For comparison, the United States still holds about 8,133 tons of gold, but most of it has remained untouched in Fort Knox since 1971. In other words, America stopped accumulating decades ago, while China has been quietly stockpiling every year since 2009. At the current pace, Reuters estimates that Beijing could hold half as much gold as the US before the end of this decade. The second move was far more ambitious: rebuild the payment infrastructure. Beijing didn't just want to own gold, it wanted to make gold useful again. In 2014, China launched CIIPS, its own cross-border payment network, a parallel system to SWIFT that allows international settlements in yuan or gold. Then came the Shanghai Gold Exchange, which now clears over 1,400 tons of physical gold each year, surpassing London as the world's largest hub for bullion trading, according to the South China Morning Post. The third move was the boldest: link gold to energy. China understood that the dollar's dominance came from the petrodollar system, where every nation needed dollars to buy oil. So Beijing began crafting what analysts now call petrogold. According to Reuters, China and Saudi Arabia have signed gold for oil swap agreements, allowing Chinese firms to pay for crude in yuan convertible into gold. For Beijing, it means importing oil without touching US dollars. For Riyadh, it means getting paid in an asset that Washington can't sanction or seize. Both sides win, except the dollar. Meanwhile, new national gold reserves are being built across Beijing, Shenzhen, and Hong Kong, modeled after dual vault systems that distribute risk across Asia. According to Bloomberg, China's total gold holdings now represent around 4% of its GDP, double the average ratio among G20 economies. This is not improvisation. It's a 15-year-long blueprint, quietly executed since 2009, when China first announced its plan to diversify reserves after the global financial crisis. Back then, few paid attention. Now the world can see the pattern. China has been playing the long game, one bar of gold at a time. When America prints, China buys. When America sanctions, China stockpiles. And when trust in the dollar fades, China's vaults shine brighter. Each bar of gold inside those vaults is more than metal. It's a political shield, a weapon of trust, and the foundation of a new financial order being built quietly beneath the surface of global trade. Every time a superpower changes its reserve strategy, the world trembles. But this time, no one is announcing it. Everyone is simply copying China. From India to Saudi Arabia, from Brazil to South Africa, countries across BRICS and the Middle East are following Beijing's golden playbook. A silent chain reaction has begun. According to the World Gold Council, global central banks purchased over 137 tons of gold in 2024, and more than 70% of that demand came from non-Western nations. The expanded BRICS Plus bloc alone accounted for about 1,250 tons, led by China, India, Russia, Turkey, and Brazil. A total worth over 150 billion US dollars, twice Germany's entire defense budget. The IMF's reserve composition data shows that the dollar's share of global reserves has slipped to 58%, while gold has risen to nearly 17%. Its highest level since the 1970s. For the first time in half a century, gold is officially back as a core reserve asset for central banks. At the 2025 BRICS Summit in Kazan, finance ministers discussed creating a common settlement unit backed by gold and commodities, essentially a soft return to a modern gold standard. According to Reuters, the BRICS Financial Committee is already testing a prototype system called BRICS Gold Settlement, allowing members to trade with one another without using dollars or SWIFT. Meanwhile, the Middle East is drifting away from the petrodollar system. In April 2025, Saudi Arabia officially agreed to accept yuan and gold for oil payments, as reported by the South China Morning Post. The UAE, Qatar, and Iran soon followed. By mid-2025, the Bloomberg Commodities Index estimated that more than 30% of oil trade between the Middle East and Asia was already settled outside the US dollar system. The shift doesn't stop at energy. Even smaller economies, Singapore, Malaysia, and Brazil, have quietly increased their gold holdings to hedge against dollar volatility. According to Reuters, Asian central banks alone bought 160 tons of gold in the first quarter of 2025. the highest since 2011, the last time gold surged to record highs. Today, gold trades above $12,400 per ounce, and JP Morgan forecasts it could reach $2,800 by 26 if de-dollarization continues at this pace. Every ton of gold now represents a vote against the dollar. Each purchase shifts a fragment of financial power from Washington to the east, to Beijing, Riyadh, and New Delhi, where a new payment network is taking shape. Two parallel worlds are emerging. One is built on credit, debt, and dollars, the legacy system of the West. The other is anchored in gold, commodities, and production, the rising system of the East. According to the Bank for International Settlements, global reserves held in gold and commodity form now exceed 4.5 trillion US dollars, surpassing the total amount of US treasuries held by foreign investors. A new era has begun, and this time it doesn't need America's permission. As nations begin trading oil and goods for gold, the dollar is losing its perpetual motion machine, global demand. Without that demand, there is no privilege, no endless stream of cheap credit, and no empire of paper promises. For the first time in generations, the center of monetary gravity is shifting, quietly but irreversibly, toward a world where value is measured not by faith, but by metal. The global financial system is quietly entering a new era, one where the US dollar is no longer sacred, and gold, long dismissed as a relic of the past, is reclaiming its throne at the center of value and power. After 80 years of dominance, America is learning that its true strength never came from its military, but from the world's belief in its money. And belief, once broken, can't be repaired with interest rates, only with real value. According to the IMF's 2025 outlook, U.S. national debt has surpassed $34 trillion, or 126% of GDP, a level once seen only during wartime. To keep its economy afloat, Washington keeps issuing more bonds, while the world's biggest buyers, China, Japan, and Saudi Arabia, are quietly walking away. Meanwhile, the Bloomberg Commodities Index shows gold prices rising over 30% in a single year, reaching a record $2,400 per ounce. Not because investors suddenly love gold, but because nations no longer trust paper promises backed by politics instead of production. The Federal Reserve is trapped in a paradox. If it lowers rates, the dollar weakens and capital runs to gold. If it raises rates, the U.S. debt explodes. Either path leads to the same destination, a slow erosion of faith in the world's reserve currency. At the same time, BRICS Plus keeps expanding, with Saudi Arabia, Iran, Egypt, and Argentina joining in 2025. The bloc now represents 4% of the world's population and over 30% of global GDP, according to the IMF and Reuters. And they are united by a single idea. We don't need the dollar to trade with each other. A new order is taking shape, quietly, steadily. Oil trades in gold, national reserves in gold, payment systems that bypass the dollar. This is not a market fluctuation, it's a reallocation of global power. The Bank for International Settlements reports that reserves held in gold and commodity form have surpassed $4.5 trillion, for the first time exceeding foreign holdings of U.S. treasuries. It's not just a statistic, it's the sound of a paradigm shifting. If the 20th century was defined by the petrodollar, the 21st may be remembered as the age of the petrogold, a world where energy, resources, and wealth are priced not in paper, but in something tangible, finite, and incorruptible. The United States still holds immense military, technological, and cultural power, but its soft power, the privilege of printing value from thin air, is melting away, gram by gram. With every bar of gold that moves eastward, the world is returning to where it began, a financial system grounded in real assets, where gold is not just a metal, but a universal language of trust. This war will have no gunfire, no surrender, and no peace treaty. Only one undeniable truth remains. When faith in paper dies, gold speaks for humanity.